Ladies and gentlemen, good day and welcome to the Dishman Carbogen Amcis Ltd earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need any assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Pascal Willemin. Thank you, and over to you, sir.
Thank you for the introduction, and good evening, dear shareholders, and thank you for participating to our investor call. I'm Pascal Willemin, CEO of Carbogen Amcis branch. I'd like to come back on the first quarter results, which demonstrate for Carbogen Amcis a very good result, far above what we have done last year if we compare quarter to quarter. This is the results of a number of consolidated actions that we have taken over last year, and we are very happy with the outcome on the quarter on the top line. We see, however, that we can do better in terms of profitability, and this is the reason why we are implementing further actions to leverage on this. Obviously, we are still struggling with a number of external factors, depending on the countries, especially in Europe. Cost of energy and raw materials are still affecting our performance. And this is something, although we've taken a lot of different initiatives, difficult to predict and follow up on those increases, because from time to time it's difficult to pass on those extra costs to final customers because of contract or high competitions coming from different type of product on different type of markets. However, we stay very optimistic for the next quarters that are coming, and we should reach our targets, which are obviously an increase of the revenues for the top line, and as well as an improvement of the profitability. In terms of future, we also have a good news because we are registering a large number of new projects coming in, with a very healthy pipeline of development projects for the CRAM activities. So it's a good sign that we have in hand a large part of our purchase order for the next months in front of us. So it gives us a lot of confidence in terms of achieving those numbers. Last point I'd like to emphasize is we mentioned already in the previous call that we are engaging Carbogen Amcis in a full digital transformation. This internal project is going well with the implementation of our new ERP SAP, and we are on track to release this new ERP during the first quarter of 24. It goes along with a number of transformations that we are going to implement at Carbogen Amcis to even improve our level of profitability in that branch. Thank you, everybody, and I pass on Mr. Achille Daral, our CFO.
Thank you very much, Pascal. Very good evening to everybody. I'm sure all of you would have a chance to go over the financial results for the first quarter of the current financial year, which in fact was a very good quarter for us. We reported a record sale of 723 crores as compared to 540 crores in the comparable quarter of last year. This represents close to 34% of growth in the revenue top line. Having said that, our estimate for the full year remains in line with what we had mentioned earlier, which would be anywhere between 2,700 to 2,750 crores. As far as the COGS are concerned, the cost of goods sold are concerned, those remain at about 22%, which is more or less in line with our annual estimate of close to about 20%. We had, as Pascal mentioned, it was a very good quarter for Carbogen Amcis Switzerland, where the commercial revenue increased significantly, and so did the phase 3 revenue. The commercial revenue increased from 11.5 million in Q1 of last year to 30.5 million in Q1 of the current financial year. So that's a significant jump, which is driving the growth in the revenues. As far as our employee expenses are concerned, which is one of the biggest expense item on our P&L, that increased by 40 crores in INR terms. However, there is a forex impact on account of translation of the Swiss franc into INR, that is to the tune of about 20 crores. And the remaining portion is largely related to the increase in the merit cost because of the inflation, especially in Europe. The other expenses of 143 crores includes a foreign exchange notional loss of about 12 crores, and that translates into an EBITDA of about 127 crores. This is after excluding the software as a service IT cost. So all of this translates into an EBITDA margin of about 17.5% as compared to 16.5% in the comparable quarter of last year. As far as the finance cost is concerned, since most of our borrowing is in foreign currency, is denominated in foreign currency, because of the sustained increase in the LIBOR, SOFR rates, whether it's US dollar borrowing or Swiss franc borrowing, that has had a negative impact on the finance cost. The finance cost, which in the comparable quarter was about 19 crores, that increased to 28 crores in Q1 of this year. All of this translated into a profit before tax of about 29.5 crores and a profit after tax of 17 crores as compared to negative 3 crores in Q1 of last year and 4 crores in Q1 of last year, respectively. As far as the segment-wise results are concerned, as I mentioned, Carbogen Amcis as a group performed fantastically, but more so on the CRAM side of the business, where the revenue increased by about 54% as compared to Q1 of last year. So from 363 crores, it increased to 561 crores. As far as our Dutch business is concerned, which manufactures the cholesterol and vitamin D analogs, we also saw a significant increase in revenue over there, which was about 46.7%. So the revenue increased from 63 crores to 93 crores, driven by growth in both the cholesterol as well as the analogs business. As far as India is concerned, as far as the NCE APIs and intermediates are concerned, most of the orders to be serviced are back-ended in the current financial year, so which are to be serviced between Q3 and Q4 of the financial year, and that is the reason we see a lower sales figure in Q1 of this year, but we expect most of it to be recouped, and we should be on our target to achieve a revenue in excess of 300 crores on the API side for the full financial year. As far as the quartz and generics is concerned, for India, the revenue stood at about 30 crores, and this was also lower as compared to what we are expecting for the full year on a run rate basis. So we do expect a pickup in that particular business in the remaining 9 months of the financial year. So I would say it's more about the timing rather than anything else as far as the India business is concerned. And obviously, I'll hand over the call later to Paolo, who can also explain about the recent regulatory audit and what we are expecting in the next month. So overall, it was a very good quarter for us, both on the revenue front as well as on the margin front. The EBITDA for Carbogen Amcis, which is the CRAMS business, stood at about 21.7% for the quarter as compared to 19.4% in the comparable quarter. The cholesterol and vitamin D analogs business did an EBITDA margin of 18.4% as compared to 19.3%. So what we see in this particular business segment is that there is an increase in the margin as compared to Q4 of the last financial year. However, the prices of the wool grease, which is the key raw material, do remain elevated, though we have seen a bit of a cooling off in the energy prices. As far as the India business is concerned, the margins were subdued largely because the revenues were quite low in the first quarter. However, as I mentioned, the revenue should pick up in the remaining 3 quarters of the financial year, which would result into significantly higher margins for the India business. Having said that, I would like to hand over the call to Mr. Paolo Armanino, our Chief Operating Officer for the India business. Paolo?
Hello, can you hear me?
Yeah, we can hear you now, Paolo.
Yeah. Good evening, everyone. So maybe, as you mentioned, I can give an update about the regulatory agency. So we had faced an inspection last week with 2 inspectors from PMDA Japan plus 2 translators. It consisted in a 4 days audit at our Bavla site, which is the same site where we are going to have the DQM in second half of September. The inspection was related to 1 product, but most in general, there was the inspection of the overall site. So all the premises were inspected by the 2 auditors. The inspection result was definitely positive. We have seen a very, very good outcome by the inspector, and only very few observations were found. The nature of the observation seems not very severe. It look minor actually as a nature, and in the coming weeks we will be receiving the report by the PMDA authority from Japan, and we will reply to their observation, which largely has been already done by the team at Bavla site during the last day, because the observation, as I mentioned, were not particularly severe. So the PMDA audit has been completed, and now we are going to focus mainly for the coming weeks to the DQM audit, which is, as I mentioned, going to be held in second half of September. So this was a kind of preliminary audit by an external agency, foreign authority.
Thank you, Paolo. I think with that, I think moderator, we can open the floor for Q&A.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may please press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may please press star and 1 again. Participants are requested to use the handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. The first question comes from Karan Agarwal from Old Bridge Capital. Please go ahead.
Hi, Harshal and team. Good morning and good evening to all of you. Couple of questions from me. The first one is, the commercial NC revenue that you spoke about, would that be a function of the French facility ramp up, or it's all coming out from Switzerland, and that numbers that you gave out were only Switzerland and not France?
Hi, Karan. Thank you for your question. But yeah, I mean, all of the CRAMS revenue for Carbogen Amcis is pertaining to the Swiss entity, UK entity, Shanghai, all these three entities put together. The French operations have yet to commence in terms of generating revenue. But Pascal, maybe you might want to add more to it.
Yes, absolutely. We are finalizing all the qualifications, and we run our first so-called technical batch, and we should start the operational work by the end of the month, and then starting the first development work with customers over September, so which is good news. But we not yet have commercial production in that new facility. For the time being, we only have a development project serving clinical trials for our customers. Okay.
A couple of other questions. One, do you expect any of your 15 late phase 3 molecules to commercialize in this year? And the second, Harshal, to you, what's the gross and net debt on books as on 30th June 2023?
Sure. So,
go ahead.
So maybe Pascal, you want to answer the first question on the 15 molecules in phase 3?
Yes. Now, for the time being, on the 15 molecules that are still in phase 3, 2 of them are filed, but the customer is not getting any kind of further information from U.S. authorities. So, in principle, we should not see this fiscal year something, but most probably for the next fiscal year, yes. One of the Japanese customers that we already mentioned, part of the product is already commercial, and another application for the product that they're manufacturing should enter into a commercial stage by 25, and we are manufacturing the validation campaign of that particular product. So we still have a lot of activity into the development, which would be probably transferred during the next fiscal year. But for this year, there is no over commercial than the one that were coming the last wave last year.
Hi, Tarang, you there? Yeah. So, Tarang, as far as the gross and net debt is concerned, so our net debt stood at about 160 million Swiss francs, and the gross debt was at about 210 million.
Okay. And just last one question, Harshal. I mean, are you seeing, any weakness in terms of your pipeline or your interaction with end customers because of, biotech funding, especially in the U.S., not garnering the momentum that we saw throughout 21 and the first half of 22?
You're absolutely right. We see an erosion in terms of market demand because when few years back, we were seeing a lot of new biotechs created and raising funds. It looks like since the beginning of the year, it's become harder and harder to fund new companies and to launch new projects. However, as I mentioned, we still have a very empty pipeline because by the end of the first quarter, we ended up by having 126 million Swiss francs of purchase order. And if you compare quarter to quarter, we raised this pipeline by 10%. So we still have a fairly healthy situation, notably linked to the fact that we are very active on the oncological market, and that specific market is still very dynamic, a bit less than it used to be. We have to be realistic, but it still demonstrates a lot of dynamism comparing to other pharmaceutical markets, yes.
Okay. Thank you.
Thank you, sir. The next question comes from Vishal Manchanda from Systematic. Please go ahead.
Thanks for the opportunity. I missed your opening comment. Wanted to understand whether Bavla facility has been inspected or it is yet to get inspected.
Hi, Vishal. So the Bavla site from the EDQM still needs to be inspected. So that is what will happen in the next month.
And so that's for sure it's going to happen next month.
Yeah, we got inspected by the Japanese PMDA. So that was last week. And that was for the Bavla site for a specific product.
Okay. And was that inspection successful?
Yeah, it was a successful inspection. And as Paulo mentioned, they had pointed out some minor observations. But apart from that, it was quite successful.
Okay. And was the audit related to an NCE product or a generic product?
So it was related to a product that we already supplied to one of our customers who wanted to launch it in the Japanese market.
Okay. So you're not currently supplying it from Bavla. Is that right? And you're supplying it from...
No. We are already supplying it from Bavla, but not to the Japanese market. So now that the customer wants it to be launched in Japan, that triggered this particular inspection.
Okay. Any color on the size of the opportunity of this product?
I don't know, Paulo, if the customer has mentioned, what could be the potential opportunity.
They did not mention how it's divided between countries, actually, so I cannot tell you about this.
The large volume API or a kind of high potent API?
Oh, large volume API. Yes, it's about multi-tons of API.
Okay. And regarding the French facility, are all the costs related to the French facility into the number?
Yes, all the costs, except for the costs that were related to setting up of the project, which were like pre-operational costs, those would be capitalized. But apart from that, all of the other costs, they go into the P&L.
So the new employee that you would have recruited for the facility, all those costs are being expensed or they are getting capitalized?
No, so they are getting expensed out unless and until, we identify that this employee worked on setting up of the plant. In that case, it would be capitalized.
Okay. I missed the guidance around when the French facility would start contributing to the revenues.
So that would be from September onwards. So most likely from Q3 on the commercial side.
Okay. And kind of peak revenues could be around $30-40 million. Is that the right number?
Yes, it is.
Peak revenues from the French facility?
Yes, that's what we have as a target.
always difficult to say exactly by when shall we reach this peak, because as you may understand, we are building up the project pipeline with our customer. What we can say is that currently we are having there a number of customer audits, and all the audits are extremely good, and we have a very nice feedback from all the customers that really enjoy this state-of-the-art facility. So, and it translates into the fact that despite we haven't started yet, we have in hand already about 6 million of purchase order for that particular unit, and we keep on receiving a number of demand, and we are quoting those demand, and we should increase our project pipeline fairly quickly. So this facility is going to contribute to revenues this year as it was planned in our budget, for sure. And the peak activities should come for the next 2 to 3 years, depending how successful we will be to completely fill the two filling line that we have in that manufacturing unit.
Okay. And just one more on the ADC linker project that you're doing for the Japanese client. When is that commercializing?
Part of that is already commercial, but it's not that part of the product that is commercialized is done by the customer himself. As we mentioned already in previous calls, the facility that we have built and dedicated to that project will come and contribute to the new applications for that particular ADC, and that is planned to be marketed by 25 by the customer.
Okay. And just one final one. What would be the capex requirement for this financial year, FY2024?
I think on a consolidated basis, we're looking at about 25 to 30 million.
Okay. Thank you very much, sir.
Yeah. Thank you, Vishal.
Thank you, sir. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. The next question comes from Keshav Kumar from Raksan Investor. Please go ahead.
As we were doing at Bavla before the EDQM audit, how have we serviced those volumes since the audit?
I'm sorry, Keshav, can you please repeat your question? I think the initial part got cut off.
Yeah, so the commercial CRAMs we were doing at Bavla before the EDQM audit, how have we serviced those volumes since the audit?
So Paulo, do you want to answer that? Paulo?
Line dropped.
Oh, Paulo's line is dropped. Okay. So basically, Keshav, what happened after the EDQM observations is that, first of all, we performed detailed risk assessment for all of the molecules that were supplied to the customer. And once that stage was cleared, after that, many of our customers got remote audit or physical audits done for the Bavla site. They submitted those reports to the EMA, the European Health Authority, got the clearance, and after that, we were able to restart the manufacturing of those molecules for those customers. In the CRAMS business, what we are mandated by our customers is to keep at least 5 to 6 months of inventory for them in order to make sure that there is no bottleneck in the supplies of the APIs, number one. And number two, the customer also maintains good amount of inventory in order to make sure that the end product is not impacted. So the combination of these two factors, and then obviously with the audits being done by the customers, after that we were able to restart the manufacturing, and then the supplies are being made to the customers. So, even today, as we speak today, we are manufacturing for most of our customers for whom we were manufacturing prior to the EDQM observations, and we expect the volumes to increase quite a bit after the EDQM inspection is completed.
So, sir, has there been any attrition or revised quantities? Because our revenues have gone down drastically over the years since then.
Well, yeah, in the initial years after the EDQM observations, the revenue dropped significantly. So if you see the India standalone revenue, financial year 21, it dropped from, we were doing like about 500 plus crores out of India. That dropped to about 200 crores in FY21, which then ramped up to 300 in 22 and then 400 crores last year. So as the customers kept on getting more and more customers started getting approvals, we were able to supply more quantities to these customers. But still, there are certain geographies where these customers, within Europe, that these customers are not able to sell or use our APIs for the final product, where in which case the EDQM clearance becomes quite important for us.
So, sir, does that mean that meanwhile that customer might be shifting to a secondary source because they can afford missing out? Yeah.
The thing is that in many of the customers, we are the sole suppliers of the API. So what we understand is that, they will be shipping from whatever stock that they have, and they would have a good amount of stock of the APIs that were supplied earlier. So, that is how we see it. And obviously in between there were the COVID years where as such, the supplies were lower than what they were prior to COVID. So that also actually helped us in making sure that the customers had uninterrupted supply.
Sure, sir. So basically, if the EDQM audit goes through successfully, then we can expect to be back on the same base in FY25, at least, what we were doing EDQM?
Yeah, absolutely. And it should be even higher than that. With the kind of orders that we are expecting from our existing customers, plus it opens up the door to get more orders from the new customers as well. So we do expect a significant ramp up in the revenues after the EDQM clearance in the financial year after the EDQM clearance.
Great, sir. And so secondly, we had mentioned that Amcis China margins were 25% for 9 months FY23. So what was the full year number for both revenues and margins?
You mean for China?
Yes.
So China, so in the first quarter, the margins were quite high. It was close to about 35% in the first quarter of this financial year. Even last year, the margins were about 30% for the full financial year.
Okay. So basically, so if I go back to FY19, we did about 15% of PBT. After that, the following year was a deferred tax write-off, which was non-cash. But nevertheless, the point being, we saw a one-off year with very good PBT, showing what Shanghai can deliver, but never the sustainability. So what has led to the margins this time around, and why should these be sustained and not mean revert back to the lower levels going forward?
So what has happened is that, there has been quite a bit of transformation in our Shanghai side in terms of the orders which are now being manufactured out of that particular site. So if you see, say 4 or 5 years back, maybe we had 2 projects that were being done out of China, versus today we would have at least 7 to 8 projects which are being done out of the Shanghai site. The Shanghai site, kind of acts as an extended branch of the Swiss arm. So we have seen many of the orders going to the Shanghai site. And, there have been a lot of improvements that have been done in that particular site in terms of making it as close to a GMP site as possible. So the plan is that maybe in the near future we might even go for a Chinese FDA so that, we are able to sell in the Chinese market as well. But Pascal, do you want to add anything to that on the China side?
No, I think you summarized well the situation. One thing I can say is that in our business, all the development work we do, we deliver to clinical trials of the customers. If the clinical trials face an issue and the customer stop the clinical trials from one day to the other, you are having an issue because you lose the project because of these clinical results. So that also explains sometimes the counter-performance from one quarter to another. We are extremely depending from the success of the clinical trials from our customer. And yes, from time to time, we face some issues because we have to find a new project to replace the one we just lost. This is the reason why I'm insisting with the sales teams to border the customer portfolio, and the more customer, the more projects we have, the less sensitive we would be to one or two project loss. This is the key to get to a more regular performance on one of those facilities.
Thank you, sir. I will come back in the queue for more questions. Thanks.
Thank you, Keshav.
Thank you, sir. The next question comes from Satish from Share Investments. Please go ahead.
Hi. Congratulations on a good set of numbers. So I have a few questions for Pascal and few for Harshil. Harshil, can you just tell how much money has been debited on the France plant in the current quarter, which on the revenue side, on the P&L cost side, which has been debited in the P&L? And what type of a ramp-up we can expect post-EDQM from the existing customers itself, where I think it's something like low-hanging fruits, where the clearance of EDQM can definitely give a good pipeline burst, in terms of revenue. If you can throw light on that. And for Pascal, what type of development pipeline you are seeing in terms of your order book for development side? Because we heard few CDMO players who are quite gung-ho on the way development side work is coming to them, Basically, they are seeing unprecedented inquiries for them. I just wanted to know what is your view and what is your business sense on those lines. And regarding the integration of Carbogen Swiss and the India Unit 9, because I think last 2 years we are hardly having any sales from Unit 9, the hypo facility. So what is the management view on making that site commercial, Yeah.
Thank you, Satish Bhai, for all your questions. I think we go one by one. So the first question regarding the cost which have been debited to the P&L for the French facility, so that is 2.7 million euros. So that's the cost which is debited in the first quarter of this financial year.
Okay.
Sorry, if you can just repeat your second question. So it was regarding the ramp up in the business from the existing. Yeah, so I think the existing customers, and maybe Paulo, you can also pitch in, but we do expect that the business from the existing customers itself should increase quite significantly after the EDQM clearance, because many of them are waiting for that clearance to be obtained, after which they want huge amount of quantities of the APIs/the intermediates from us. Paulo, do you want to add to that?
Yeah, exactly. See, exactly as you are saying. Our main customer, and also the last weeks and months, I'm speaking directly with the customer multiple times. They are just waiting for the green light from EDQM, and they are having already PO available and selling price available, and so we discussed already what is going to happen after EDQM. So there are also many markets which currently they cannot supply material, and immediately after the approval, they will be able to supply to this market. So major part of the customer are just waiting for the approval by the EDQM to restart the business. And many of these customers are already discussing with us in advanced phase of contract, PO, and so on and so on.
Okay. And to Pascal, regarding the development pipeline, you can throw some light on that?
Yes, absolutely. So regarding the development pipeline, basically the base of our customers is turning around mainly oncology, because we have hypo capabilities in Switzerland and a very long expertise around that. We also have a number of ophthalmologic products and also a number of orphan drugs applications that we are chasing. The capability installed in Switzerland are not huge comparing to some CMOs where they have a lot of plants, a lot of reactors to fill. So we have we more medium size compared to our CMOs. However, we have those hypo suites, and with that expertise, we are able, as I mentioned, because that part of the market is still dynamic, we are able to still fill and continue to grow our pipeline of development, despite of the trends that has been described earlier on the call, where here and there a few CMOs are struggling a bit to fill their large equipment capacities when it starts to dry a bit from a biotech perspective.
And regarding Hypo Unit 9, we have one of the best Hypo facility, but it's lying idle for last 2 years. So what is your management's view on making that plant commercially once again viable?
So regarding that facility in India, of course, it's also part of the Bavla site, and as Achille mentioned, there is an expectation from customer to see audit clearance from the DQM. So yes, the facility has an attractive setup, but we have to be patient to clear the desk from an audit perspective, and from that point in time, we can reinitiate and rediscuss a number of discussions that were on hold for a while with some of the customers.
Okay, thank you.
Thank you, Suresh.
Thank you, sir. The next question comes from Ketan from Robo Capital. Please go ahead.
Hello, sir. Wanted to know if you have any debt repayment plan. Do you plan to sell any non-core assets and repay the debt, or how will be the debt level in next 2 to 3 years?
Hello, Ketan. Thank you for your question. So as far as the debt is concerned, we have the regular repayments which we'll be doing every year. But if you see, most of the debt has been taken in the last 2 years, 2.5 years, and that is for the capital expenditure that we were doing for setting up the new French facility, as well as the ADC expansion in Switzerland. And what's ongoing right now is the digital transformation that we are undertaking across the Carbogen Amcis group. And the fourth one is obviously the capex that we are doing at the India side, taking into account not just the regulatory audits, but also keeping into view the next 10-15 years, where we do not anticipate to face any such regulatory issues as we did in March of 2020. So what we expect is that we would start realizing the returns from this investment over the next 2 to 3 years, which would help us in generating good amount of cash flow, and which can definitely be utilized to either pay off the debt or keep it as an investment, whatever. But the net debt in 3 years' time should reduce from where we are right now is what we are targeting internally. Having said that, if you see our business, it is quite capital intensive. So depending upon how the business progresses, in order to get new molecules, we'll have to see, how the molecules commercialize, the ones under late phase 3 development. We are trying to utilize the sites in Manchester, Shanghai, and eventually India for manufacturing the intermediates, if not the final API for these molecules, especially for the larger volume ones. And, we would not want to have any unnecessary capex but try to fully utilize the capacities and the capabilities that we have across the organization. So, to answer your question, we do expect that the net debt should come down in the next 3 years with the free cash that would be generated. But obviously, there are no plans to sell any non-core assets because we don't see any non-core assets as we speak right now.
Okay. And these fixed assets which you are purchasing from last 2 to 3 years, this must be in relation to all the expansions you have just mentioned, right?
That's correct.
Okay. So, and then what will be your capex plan and maintenance capex going ahead?
So I would say on a run rate basis, about 25 million can be taken as the run rate of the capex to be done over the next 3 years. It's for 25 million per year, 25 to 30 million. So this would include the maintenance capex as well.
Sorry, 25 million
Swiss francs.
Francs, yeah, right. And okay, so all of this will be maintenance. Okay, and if you can give any estimates for... Yeah, please go on. Sorry.
Yes. No, so most of it would be maintenance as well as, some of it would be like replacement capex. Some of it could be, like, for example, we entered into this co-investment agreement with the Japanese customer. So if depending upon the volumes that might be required for some of these new molecules, we might enter into this kind of an agreement which would require some kind of capex as well. But all of the capex that we would be doing, that would be backed by either a firm contract or a firm purchase order. So there would be no capex, that would be just in the anticipation of some business coming in.
Okay, and can you provide some estimates for FY25? Revenue and
in terms of revenue, so as we guided even last time, we do expect that over the next 3 to 5 years, we should expect the revenues to increase by at least 12 to 15%. The operating margin should increase at a higher pace as India keeps on ramping up the revenues, especially out of the Bavla side. So as you would have seen, prior to the EDQM, India was doing margins of 40% plus. And once we are able to get over this hurdle of regulatory audit, we do expect that more business should come to India, and that should help us in improving the overall group EBITDA. So the EBITDA should keep on increasing by about 15 to 20% year over year.
Okay, thank you. That's it from my side.
Thank you very much, Kate.
Thank you, sir. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. The next question comes from Rupen Shah, an individual investor. Please go ahead.
Yeah, hi. Thanks for the opportunity. Harshil, if I remember correctly, last 1.5 to 2 years back, we had announced co-partnership with a European and a US partner. So what is the status on that?
No, so what we had announced was, what I just recently mentioned, which was a co-investment agreement that we had entered into, or we have entered into with this Japanese customer, for whom we would be manufacturing the ADC molecule.
No, that is there. Japanese is there, but we had announced with an European partner and an American partner also.
European. So there are other
press releases are there.
So there would be there are co-investment agreements with some of our other customers as well, including some of the biotech companies in the US and Europe. So for that also, we are currently manufacturing the molecule and supplying it out of the Swiss entity.
Okay, so investment in that must be much less than what we have done for the ADC project, right?
Yes, that's correct. That's correct.
Okay. And what is that? What is the status of we have applied for a patent for a vitamin D analog or something like that? What is the status on that?
Yeah, so that has been applied. We are still waiting for the results of it. So that has yet not been approved. So we are waiting for that.
Okay. Thanks for the opportunity.
Yeah. Thank you very much, Ukraine.
Thank you, sir. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. As there are no further questions, I would now like to hand the conference over to Mr. Pascal Williman for the closing comments. Over to you, sir.
Thank you very much. Well, thank you so much for your attention today, and we'll be back in a quarter to describe our revenues and results. I thank you everybody to participate today, and thank you Achille, and thank you Paolo for your participation.
Thank you very much, everybody. Have a lovely evening.
Thank you, sir. On behalf of Dishman Carbogen Amcis Ltd, that concludes this conference. Thank you for joining us. You may all disconnect your lines now, and have a pleasant evening, everyone.